Boom! What's going on, Investor Maniacs? Your boy, a Night Rider here with your Robinhood stock market update of the day. The S&P 500 just crossed 3,000 for the first time ever. Investors are celebrating the Fed chairman's testimony to Congress, which hinted that the central bank could cut interest rates this summer as the trade war continues. Up first, Nintendo unveils the Switch Lite, a portable-only version of the legendary gaming device. Your 2-year-old iPhone may be ancient, but Nintendo measures time differently. The 120-year-old Japanese electronics icon, founded in 1899, originally making playing cards in Kyoto, that's probably how you say that, Kyoto, is convincing customers it's still fresh with the Switch Lite. The stock rose 3% on word of the next version of its best-selling gaming device. Smaller, cheaper, and no TV. Although it sounds like a downgraded hotel room you probably don't want to stay at, we're actually talking about the new Switch. The revolutionary design of the original Switch let you play on a handheld screen or on TV. This one's purely for the go. Convenient, but limiting, and $200 instead of $300. The yellow, gray, and turquoise options that this Game Boy descendant comes in are somewhat Pikachu-ish? The takeaway, Nintendo thrives on blockbuster consoles. Super Nintendo, Game Boy, N64, and Wii are different chapters of Nintendo's dynasty. Okay, maybe the N64 wasn't the greatest seller, but it was still awesome. And this new Switch Lite has got me going, here we go! Right? Am I right? The Switch has sold a shocking 34.7 million units in the 2 years since its launch, generating 85% of Nintendo's revenue over that time. Impressive and also a little scary. The stock is up 48% in those 2 years as it plays along with the Switch. So, what does this mean for you as an investor? I like Nintendo. I say it's a buy. I think the Switch Lite will marginally help hit a different demographic who didn't want to pay $300 but also just want something for the go. However, I would really like for them to diversify their revenue and grow Switch Online. I believe Switch Online is vital to their long-term success. Xbox has Game Pass and PlayStation has Now, and they are way ahead in the marketplace. Subscription-based services are the way of the future. Nintendo has to catch up. They can't just be offering these old NES games, which are fun, but you need more than that. And at least, like, let's try and get in some N64 stuff, some Wii stuff, some GameCube stuff. Let's at least get a little bit more than these ancient NES games for the time being. I love the Switch and its ability to be both mobile and TV connected. It's a wonderful differentiator, but they have to expand Switch Online. I believe they will, and that's why I say it's a buy. Up next, Zoom made a big mistake, and it's got customers saying, Zoom, 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 you aren't my supernova girl. Pat myself on the back for that one. Enter your passcode on the touch-tone keypad to listen to Zoom's brutal security flaw. What's given Zoom a cult corporate following is its easy-to-use video conference calling. On Monday, we learned about the bug. If an attacker sends you a malicious Zoom link, it opens your Mac webcam automatically, exposing your manhood. I mean, whatever you're doing at that exact time at your computer, which may be totally different than what I'm doing at my computer at that time. Zoom's response was even worse than the flaw. Enter Jonathan Leichstosh. Again, probably like slaughtering that name, the software engineer who side hustles as a security flaw hunter. Here are the highlights of the awkward series of events detailed on his blog post that exposed the Zoom issue. On March 8th, John tweets at Zoom he found a problem. He got no response. A couple weeks later, on March 26, he emails Zoom warning he will disclose the flaw in 90 days. He even offers a quick fix. The next day, on March 27th, John is offered a bug bounty by Zoom, which is payment from Zoom for the help of finding the problem, which he actually refused to accept. Now we fast forward a couple months to June 21st, and Zoom says it finally fixed the flaw. Fast forward 2 more weeks on July 7th, and the fix stops working. The next day, on July 8th, John told the world. The takeaway: investors vote in real time via Wall Street. Despite the security flaw, the flubbed fix, and a beloved CEO's belated apology, shares didn't drop. They've actually risen since Monday. The bug's most likely impact on Zoom would have been customers leaving or lawsuits arriving. The stock's reaction signals that investors aren't worried about either of those things. What does this mean for you? Well, either way, I'd say Zoom is just too expensive at this point in time. It's trading at 64.5 times trailing 12-month revenues, which is too rich for my blood, and I'm not exactly a fan of the space they are in. Up next, private prisons lose another bank, SunTrust. Your parole has been denied. SunTrust Bank just announced it will no longer do business with private prisons or migrant detention centers. It's following JP Morgan, Wells Fargo, and Bank of America, which have all boycotted the industry this year as well. The trigger? Reports of inhumane conditions in border prisons that are sheltering unaccompanied children. P.S. Georgia-based SunTrust is mid-merger with North Carolina-based BBT. Afterward, it will awkwardly be called Troist? Truist. Troist? That seems like a really dumb name to me. Let's look at the prisons affected. GEO Group and CoreCivic are the 2 biggest publicly traded and for-profit prison companies. They get paid by the federal and state governments to incarcerate prisoners for them. About $24,000 per year per prisoner is what they are paid. GEO Group and CoreCivic both think the banks are caving to political pressure. What's the takeaway? Reputation and profits. It's a trade-off. Yes, the banks are caving to some pressure, but various types of pressure. The banks are turning down potential profits to protect their reputation among the community, their employees, and their investors. Sometimes it's the other way around, like HSBC, which became the top bank of Saudi Arabia despite the nation's human rights abuses and recent murder of journalist Jamal Khashoggi. Yeah, try Googling that one. So here is my portfolio for full disclosure. I like SunTrust, I like Wells Fargo, I like Bank of America. I do not like HSBC. My preferred bank is JP Morgan. I do not like GEO Group or CoreCivic. Hey guys, I really appreciate the likes, comments, and subscribes. They mean so much to me. May the market be with you.